So you want to get into precious metals, but you don't know where to start. Well, here's an introductory video that'll help you out. Hey YouTube, how you guys doing? This is Silver Husky doing a video today, more of an introduction video to the precious metals market and how it all works. A lot of us woke up this morning, July 27th, and realized that both gold and silver had skyrocketed even further. Here we're seeing gold at $19.42 an ounce, and you can see silver is at $24.45, and that is as of 7 o'clock this morning. And that's been kind of the trend lately. So let's discuss what that all means, and is it too late to get into the bullion and precious metals market, or is this just getting started? Now, if you're new to the channel, please hit like and subscribe, and don't forget to hit the notification bell for new videos and content that comes out daily. I want to first talk about what spot price is, and a lot of people see that term and don't really know what it means or where it comes from. So when people refer to the spot price, what they're talking about is any kind of metal, right? It can be gold, silver, platinum, palladium, rhodium. They're referring to the price at which the metal can be exchanged and delivered upon right now, right in the moment. So it's constantly fluctuating. So in other words, the spot price is the price at which silver, in this case, is currently trading. Spot prices are often referenced to in the silver and gold market, as well as crude oil and other commodities. Prices are in a constant state of discovery, and those are watched by banks, financial institutions, dealers, and retail investors. Since the beginning of the 21st century, silver prices have increased overall, catching the attention of many investors. Many people look to precious metals such as silver to help protect themselves against the ongoing devaluation of the US dollar or other fiat currencies, and the volatility in the stock market. Other investors, sometimes referred to as preppers, believe silver will play a key role in bartering and trade in the event of economic collapse. Physical silver bullion is most commonly found in coins, rounds, and bar forms with several sizes options for each. Some investors enjoy owning government-minted coins, while others prefer paying lower premiums for bullion bars and rounds. In any case, there is a vast amount of options available in terms of investment vehicle. Aside from bullion, paper silver is also available in the form of ETFs and certificates. These options are different from physical silver in the sense that the owner never actually gets to hold the silver in their hands. A silver ETF or certificate is basically a piece of paper saying that a bank or financial institution is holding a specific amount of silver for you without you ever seeing the silver. Many people in the precious metals community do stand by the statement that if you don't hold it, you don't own it, meaning those paper certificates and ETFs may not actually have the physical metal in their possession, and if you don't take delivery of it, you may not actually ever get it. A lot of people ask, how is the spot price of silver actually calculated? Well, silver is a commodity that trades virtually 24 hours a day across many exchanges such as New York, Chicago, London, Zurich, and Hong Kong. The most important exchange, however, when it comes to determining the spot price of silver is the COMEX. The spot price of silver is calculated using the near-term futures contract price. By near-term, that may mean the front month contract or the nearest contract with the most volume. Second question being, how often does spot price change? The spot price of silver is constantly changing. The spot price of silver changes every few seconds during market hours. Between domestic and foreign exchanges, spot silver prices update Sunday through Friday from 6 p.m. Eastern Time to 5:15 p.m. Eastern Time each day. Spot price remains static during the 45-minute down period from 5:15 p.m. to 6 o'clock p.m. Eastern Time each weekday, as well as from 5:15 p.m. Eastern Time on Sunday until 6 p.m. Eastern Time Sunday. Although silver and other markets may have periods which they are very quiet, they also have periods in which the prices change very rapidly. And if you're not located in the U.S., don't worry, because the spot price can be converted into your local currency. The next question would be, what is the spot price actually referring to? So the spot price refers to, or it's quoting, the price of 1 troy ounce of whatever that precious metal is. Could be gold, could be silver, but it's always going to be referring to the 0.999 value, meaning the pure form, not some diluted 90% or less. It's talking about the pure bullion grade form of that metal. Now, spot price is going to be constant all over the world at the same time. So whatever is being quoted by the COMEX as the current spot price is going to be recognized globally as the spot price. However, that's not to say that there might not be some other tax or fee involved in your locality wherever you live that is on top of or considered a premium above spot price. And speaking of premiums, why can't you buy silver at spot price? Now, that's not entirely true. Sometimes you can find a spot price deal, but generally speaking, silver is sold by dealers with a premium to the current spot price. When one is looking to sell metals to a dealer, the dealer may often offer spot price or slightly below the spot price of one's metals. The dealer premium, as it is often called, represents the price at which the dealer will buy the silver and the price at which the dealer will sell the silver. The difference between the spread represents the dealer's gross profit. This is how dealers make profits and stay in business. So don't get mad at a precious metals dealer when they charge a little bit over spot. Now you might notice here on this image you see a bid price and an ask price, and they're close, but there is a difference. So the bid price is the maximum offer available for a particular commodity at the present time. The ask price is the minimum asking price available for a particular commodity at the present time. More simply, if you want to buy, you will pay the ask price. If you want to sell, you will receive the bid price. The difference between the two is the bid-ask spread, and often is a reliable indicator of an investment's liquidity. The smaller the bid-ask spread, the more liquid a commodity and the less transaction fees an investor will incur when getting into and out of an investment position. So let's take a quick second to talk about silver futures and paper silver. What are silver future contracts? Silver future contracts are an agreement between a buyer to purchase a fixed amount of silver from a seller at a fixed price at a specific time in the future. A simple example would be a buyer agreeing to purchase 5,000 troy ounces of silver at $20 an ounce, 2 months from present. If during those 2 months the price of silver decreases $2, the seller would profit $10,000 and they could source the silver on the open market for $90,000 and then sell it via the futures contract for $100,000. If during those 2 months the price of silver decreases $2, the buyer would profit $10,000 and they would now have to purchase $110,000 worth of silver for only $100,000 cash. Futures contracts also allow bullion dealers, including JM Bullion, SD Bullion, APMEX, to hedge their physical silver positions by electronically buying and selling metals out in the future to offset their physical inventory positions. As spot price moves up and down, the offsetting gains and losses between physical and future positions ensure that movements in the spot price do not affect the company's position. Metals future contracts trade on a variety of worldwide exchanges, including the COMEX and NYMEX. The COMEX is a primary exchange for trading gold and silver futures contracts. Standard gold contracts are for 100 troy ounces of gold, while standard silver contracts are for 5,000 troy ounces of silver. The NYMEX is the primary exchange for trading platinum and palladium futures contracts. Standard platinum contracts are for 50 troy ounces of platinum, while the standard palladium contracts are for 100 troy ounces of palladium. The allure to paper trading is that you don't actually have to take possession of the physical metal and therefore don't have to find a way to store it or secure it. So could you buy silver just by buying the futures contract? Well, one could buy silver future contracts and take delivery, but this is not what normally happens, right? Taking delivery on a silver futures contract usually involves additional fees and costs, and one is limited in the product type. In addition, the amount of silver is fixed, as one regular silver futures contract equates to 5,000 ounces of silver. So what about leverage on paper silver products? Are the prices the same? The spot price of silver is the price at which silver may change hands and be exchanged right now in the physical form. The spot price should not be confused with, say, the price of silver-based ETFs, where an ETF price may be based on multiple factors. So what are some of those things that cause silver prices to change? The price of silver is always in flux and never sitting stagnant for very long. There may be many different factors that could potentially affect silver price fluctuations. These factors may include, but are certainly not limited to, supply and demand, currency fluctuations, inflation fears, geopolitical risks, and asset allocations. The price of silver is determined by the laws of supply and demand. That being said, if the price of silver drops too low, the mining companies may elect to slow down operations and simply mine less silver. That fact is, if the price of silver gets too low, then the companies may mine silver but operate at a loss due to minimum cost. Should silver fall to a very low price, then these mining companies may scale back operations and attempt to wait for higher prices or slow the supply of silver reserves to the market, thus helping bring the force of supply and demand back into balance. So, why does silver trade around the clock? The demand of silver is constantly changing. World markets are in a constant state of price discovery. Many other commodities and investment products also trade around the clock. While silver prices can be volatile at times, there are also times when the prices are relatively quiet. In addition, many customers buying physical silver are buying it as a long-term investment and understanding that short-term price fluctuations may be volatile. So some quick side notes. In the USA, certain states have sales tax on silver bullion products. Depending on which state you live, you may have to pay some extra tax. So check out your local buying guides for whatever bullion products you're looking to purchase. Just to know that there are 31.1034768 grams of silver in 1 troy ounce, right? So how many troy ounces in a kilo? There are 32.151 troy ounces in a kilo. And another question often asked is, why is there bulk pricing difference when you're purchasing bullion products in bulk? Note that there are credit card fees and there are shipping fees and things like that. So when you buy in bulk, you're actually bringing down the cost to the seller with regards to shipping and other little fees. So they will give you an incentive if you move product. So they're willing to take a little bit of a loss if you're willing to buy a little bit more. You'll also note that a lot of coins carry something called a premium. You can see a couple pictured here that look very nice with colorization or some different design to it. Those are 1 ounce of silver. However, because they are designed in a certain way or minted in limited mintage, they do carry something called a premium, which is well over spot price. In the case of this one shown here, this is nearly $1,000 coin, but it is 1 ounce of silver, so it's still worth the silver weight of $25 and some change, but the premium is staggering. So if you did want to purchase in bulk or stack a lot of weight, I would recommend staying away from the high premium items. Stack weight with the lower premium, typically junk silver, 90% silver, American coinage. And please don't be confused by the face value printed on the coin. It might say something like 25 cents or 50 cents, but that doesn't mean that the coin is only worth 25 or 50 cents. Be mindful that if it has silver in the coin, it's going to be worth a whole lot more than what's printed as face value. So one other thing to talk about is where to buy these items, right? Where to buy silver and gold and other precious metals. I would say the first place to look is always going to be your precious metals dealer, right? A local coin shop or any kind of maybe even pawn shops might have them. I would check apps like OfferUp or LetGo. Sometimes you'll find something good on Craigslist. I would also check occasionally eBay, but I'd be very careful with things like eBay. And then also you could go to the major online bullion retailers, right? So this would be your JM Bullion, APMEX, SD Bullion, Provident Metals, Bold Precious Metals, and there are several others. So just so you know, those guys are going to be very reliable, great shipping, great tracking, great customer service. However, you are going to pay a little bit more for premium because they do have a much wider selection. So you pay for what you get. Now, the last thing I would like to discuss is the gold to silver ratio. And simply put, this is how many ounces of silver it takes to buy 1 ounce of gold. Here's a chart put out by SD Bullion that specifically shows how that has changed over the years. And I did a video on this a few weeks back, but very interesting. The last thing is looking at different trends that cause an inflation in the price of silver. And of course, that price is comparing silver to fiat currency, the current dollar, the value of the dollar. So you can pause this and take a closer look at that, but those are all, they hold true. And please remember that I am not a financial advisor. Before you make any big decisions, please check with people that are deeply involved with your finances so they can help you make great decisions. Now, here's an example of something that I did recently. I purchased 3 100 troy ounce bars from the Scottsdale Mint. At the time, they were selling them at $17.10 an ounce, which means $1,710 a bar. And this might seem like a lot, but fast forward to today, where spot price has increased dramatically, and you can see that the current going rate is now $2,811 for a profit of about $1,100 per bar. And results will vary, so I don't recommend that you do that. I'm just giving you an example. So anyways, I hope you guys enjoyed the video. I hope you learned a lot. Please don't forget to hit like, subscribe, ring that notification bell for any upcoming videos, and good luck out there because there's a lot of good things happening. I just wish you all the best of luck and hope that you all make some great moves and great decisions. See you next time.